Okay. All right, guys. Can you everything coming through clear, loud and clear, loud and clear? Yep. Just let me know. So I'll chuck it into the chat, and then we'll get up and racing. Jason, morning all tonight. I think just all good. Thank you. Uh, pretty much, mate. It seems like that. It seems like it is a bit of a set and forget market at the moment. The Nasdaq has been opening up and just banging higher, which is I wouldn't say manipulation, but it's just you got to keep asking yourself who is buying at these levels. That's why I think it's your mums and dads that are getting stuck into the ETFs. I mean, the ETFs are booming. They've been booming for a while now, and it's just sort of you see more and more people marketing it to their client bases. I know quite a few newsletters and stuff that are big into the ETFs now. The ETFs just go and sweep the market, and they're just randomly sweeping up. So if you get obviously everyone knows the Nasdaq's just going gangbusters. Um, I think that sort of ETF thing is just continuing to sweep it. They're buying, buying, buying. It's sweeping that market, so it's not buying up individual stocks. Sorry, each individual stock's not getting bought up by people. It's just a random buying everything. I mean, Facebook was up 8% or so last night. I can't figure out. I don't see why. Amazon 2.8, Google about 2.7%, Apple 1.3%, and that actually backed off slightly. So there's some big movers. What was it? Salesforce. I've heard of them before, but I didn't think they were that big, and they've up 26%. So it's just going nuts. Anything tech related, and it's flowing over into our market too. Tech stocks are doing well. I don't even know which ones are doing well, but I just know that tech stocks. I think again, it's sort of that ETF effect. And if you go and look at, I don't know if anyone has, is it Mike Burry, the guy from the Big Short? I don't know which one the guy that's who was listening to heavy metal in the movie. If you watched it, he's talking up ETFs and how they can be a real they can blow out prices. They're not. You can see individual stocks that are not at fair value because they're getting bought up from ETF buying, constant ETF buying. Because it's just the easy way. No one has to do any research. You just look at it, bang, in you go. That sector's hot. Let's buy the hell out of that one. So it seems to be the case on the Nasdaq potentially. I mean, that's just me trying to figure out why it's just going ramping up so high. But I think you're right, Jason. Just buy. It seems it that way. And it's the same with you've got APT. I just saw something pop up on APT. APT is just if you just bought that at the start of the week, you're up 15%. So you can buy in a completely stretched market, and it's still stretching higher. So that BNPL thing is just the place to be at the moment, and there's no trigger or reason to sell at the moment. We've got, like I said, the S&P is at new all-time highs for about fourth session in a row. Yet their economy, they've got riots tearing apart the country. They've got still high unemployment, massive levels of debt, but either way, we don't care. It's just going up. So amazing stuff to watch at the moment. So we'll just get on to, I just want to go over start. We've got the intraday stuff here, and then I want to focus just on the US dollar. We'll talk a bit about the US dollar. I think that's sort of the key at the moment. It's banging around and coming up into the Jackson Hole tonight where Powell speaks, and it's all geared up. The idea is around inflation at the moment and what's happening. So talking up inflation a bit and what the Fed's view on that's going to be. Uh, oh, don't worry, mate. We were in and out of it. I was in and out of it for the alert service prior to the change to APT. I can't remember the code prior, but we were holding it over that change, which was less than $5. Bought it less than five. Be in and out a few. I think the last time we got out was about 18, 19, 20 bucks, maybe a tad high. Might have had another run up to 24, and that was it. Makes me feel stupid when I keep looking at it now, so I'll stop looking at it. Feel smart again. Um, yeah, the Nikkei. This is the Nikkei. There's a 5-minute chart. That to me looks like it's ready to pop. It's just probably going to wait for the Hang Seng. So Hang Seng really could have popped last few days as the other markets have kicked off, but they didn't. And it's probably going to hold down. It could hold down the Nikkei just until then, and see what the Aussie market does as well. They, each way bet on the Hang Seng at the moment. Resistance up here is still holding. Support has been tagged a few times. It's just taking out support. So it took out this low with this push down previous day. Again, yesterday it took out the previous low. It's not, so maybe it's going to do the same thing, take out that low. And then you just got this edging down support. It's just dragging in some sellers. Bang, up we go again. Could do the same thing, or this thing could sort of edge down and blast straight up. It's a bit of an each way bet between it. It's more rangy bound. That to me, there's two things. It seems to be rolling, the longer term MAs are rolling, but it could be just holding that and then ready to launch because it's still below this 25,756 zone. Not a resistance zone, it's just a previous high, key high, so it could be consolidating, ready to blast off again. So we just have to see how it opens for the Hang Seng because you're going to see, just look at what levels get taken out, how they trade on the open, are they ready to fall? Till we get a lower high to work into, it might blast off, wash out some of these levels on the upside, then start to retrace again, which is done, I think, quite consistently. That blast up, and then sell off, blast up, sell off. So if that's the case, it's just rinse and repeat. We'll see how that goes. Yeah, Nikkei, like I said, just expecting that to go high. It's opened up and not doing a hell of a lot. So it's opened up, that's 9:30, popped up, down, so it's still stuck in that little minor range there. It could be edging to the downside. This could edge down, take out that low, and then bang up. Or it could be, as long as this low stays intact, you might flush out, but that low stays intact around just in here, 23,250, then I'll be expecting that to start to rise. I might see it rise right now. We'll see. SPY, that to me looks like it's ready to go, but they'll typically probably blast down and then go. SPY is tending to look set up one way and go the other just to start, and then maybe a rally into the close. Then in saying all that, retail will open the market, and if they open it a lot stronger than you're up 20 or 30 points, which we're expecting, that you'll see it in the SPY come into it. You'll see this bullish sentiment across the board about 9.55. So that's why I sort of think between that first 10 minutes when they're adjusting prices on the ASX opens at 10, from 10 to 10:11, the SPY may do its flush moves, put some people back on the sidelines, and then get ready to pop again. Thanks, mate. Thank you. Hope I was clear. So anyone that didn't know, I was just talking about someone on TradingView, Nifty Pips, about the stream I did yesterday, or the live thing I did yesterday. That's good fun. They're a good little outfit there. That's a spotty, by the way. So got this. Honestly, that looks bullish to me. You've got this downward trend starting to consolidate through here. We held the inside level at 60.74. That to me is, I want to see this level hold, this zone hold. I don't mind if it flushes down into it and rallies, but it's going to be tough going if we just take off from here because you'll be sitting there waiting for an entry unless you buy it on the open and you risk getting flushed out, which happens a lot, 99% of the time. If if it just jams up and you got long, it's quite risky. So you'll probably have to go into a 1 minute chart and have some, it could be extended. You look at this little minor pullback for a couple of candles and off we go again. That might be the case, but we'll see. Dow, I'm not really focused on the Dow today. I don't think there's enough volatility lately into the Dow to get sort of those intraday entries. I think when the market was, back in March, when it was moving, the Dow was moving and it was moving other markets. Now it seems to be just sort of holding, biding its time, chopping around until the European Open, where it starts to get lifted again, and it starts to find some support. But either way, that trend longer term, we've held this inside level at 27,630. We lifted off that. We've been starting to hold 28,115. So either way, it's tending to look bullish again, and that Dow's probably, it's lagging, say, the Nasdaq and the S&P. The S&P's, I suggest, is only getting to those highs purely because of those, a few mega cap tech stocks. So if they start to turn for whatever reason, I think this S&P is going to cop a bit of a beating, and we'll probably find the markets will be quick to rush for the door. I mean, the higher it gets stretched, everyone knows that, but no one's willing to sell yet because they've probably done that previously. So why would you sell when, anticipating you'd rather just go, well, I'm well up at the moment on my trades. I'll just let them go. And if I get stopped out on a big spike lower, so be it. I'm still locking away some handy gains. So that's the intraday action we're looking at. We've got iron out. Now, I'll go straight to the dollar index. Now, that dollar index, last night, there was a bit of action on it. And I know we sort of said probably in the last couple of posts that dollar's going to get sold off, or potentially could come under pressure, but because of the interest rate outlook from the Fed. Now, it doesn't make a lot of sense. I think markets will factor in what they, factor in expectations. So if they well and truly expect that the Fed's going to have what they call an average range rather than the 2% level target, which they're looking at for inflation, that means they're just going to let inflation run a bit longer. So maybe get 2.5 to an average around 2.5, maybe high 3 or low 3%. So if they're going to let that happen,
I think the market, I think if that's what they're going to, Powell's going to say, is going to hint at tonight, the market's going to be prepared for that. I think that the US dollar is already factoring that in. Now, I don't, I don't think that would lead to weakness. And I was thinking about it this morning. My view or my history or my ideas based around, you got inflation, you're looking at interest rates, interest rate rises. If you're looking at interest rate rises, you're looking at people moving to the US dollar again because they're looking for that carry trade. Compared to say the Aussie dollar, you might have US appreciating. Aussie's the Aussie heads south. Other currencies, maybe if the European region is not looking to raise rates, they're still struggling. People are buying up the US dollar because they're going to have that carry trade because they're looking for the appreciation on their US dollars as opposed to euro. So to me, that should be bullish if they're looking at inflation, not bearish. And couple that with potentially no more stimulus. It's been sold down on the back of further stimulus. Now, if you don't get that stimulus, that should be bullish too. So I'm looking for this. It could be completely wrong. We might find that it flushes lower and just continues to drive lower. But I don't understand why, if he talks up inflation in the near term, that shouldn't be bullish because you're talking up interest rates too. Coming from zero, having to stop inflation, you can only raise rates. So I'm sort of looking at that, thinking, well, this could be a bit of a setup. They talked it up a bit of weakness into the dollar. It's not good for the dollar. It's good for gold. And the only reason it's good for gold is if dollar sells off. It's got nothing to do with the interest rate. So if the dollar sells off, yeah, gold's going to go up like we saw last night, spike $20, $30, only because of this US dollar sell-off. Now, I'm sort of skeptical. It'll be interesting to see how. I'm not positioned either way. I just don't believe that we're going to see a massive US dollar sell-off because we're talking up inflation. It doesn't make a lot of sense. And it did sell off because of better than expected numbers last night. But the market focuses a lot on just one thing, and they could prep a market prior to that number, as in talking up lower US dollars. So they'll press it down, and then catch everyone off guard with a big rally, if that's the case. So I'm sort of just got my eye on US dollar. I think it'll be interesting to see what we wake up to tomorrow morning, whether it is lifted. But either way, longer term has still got that 92.50 zone. We've got these lows in here around 92.20, still intact. That level support is still intact. You've got some resistance that held up okay at 93.30, thereabouts. It didn't take out the high at 94. Sorry, major 94 up here. Didn't take out this little inside level at 93.45 or thereabouts. So it is range bound, and that's coming into that Jackson Hole Powell comments. Yes, that's the case with the dollar. If it does find some further selling, I don't understand why either, because if the numbers are getting better, you got economic growth. Everyone's talking up good numbers out last night, and if there's further good numbers coming out with regards to in industrial numbers or anything really. Can you still hear me okay? Yep. Something disconnected in my head. I don't know what it was. I've got my headset hooked up to all my phones and stuff, and they're turning off and on. Anyway, we've got, let's say, better economic numbers should mean no more stimulus, should mean US dollar rallies, in my opinion, because the only reason it's going down, you keep loading up US dollars into the system, loading up, you devalue the dollar. And this is the reason why we've been selling off here, and all of a sudden we're still waiting around, which should have been another $1 trillion pumped into the market, sending the US dollar down. It doesn't look like it's going to happen, in my opinion, even a lot less than what we're expecting. So if the market's geared up for $1 trillion and it's not going to happen, that people will be looking to buy back short positions. As simple as that. So we'll see. If anyone's got a different opinion, I'm going to get off now, not let you answer me. But that's it for now. I don't really need to go on crude oil. It's sort of contained between highs and lows because, both demand, it's been capped by demand concerns because of coronavirus until that gets under control. I don't expect the crude to kick off, whereas it's not really capping copper. Copper seemed to rally last night, so it was going sideways when the US dollar was going up, and when the US dollar fell off a cliff at about 10:30, 11. Copper rallied, so it looked like it was prepping to go up anyway and back up to that zone around 3 and above. So anyway, guys, that's probably about it for today. We'll keep an eye on what happens, but just like I said, the US dollar, just keep an eye on that. I think if you get really bullish on gold, and gold hasn't broken through this zone at 1950, it's really just holding these levels here, that bit of a flush is, it could be prepping another sell-off. We don't know. I mean, to me, if it can get through that level, basically, we've got to get out of there. We've got this zone through here, which is still holding. And just because a $30 rally doesn't mean anything. It could still hold that zone and come down, and all of a sudden, all these bulls have dragged in looking at gold because they've been taught and told that it's going higher. Are just getting suckered in, and it's going to come back down again. Potentially, if we start to get this kind of lift, and then we get action like this, then yeah, it's probably time to get bullish, and that would mean US dollars heading south. Like I wouldn't expect gold to rally another 10, $20 before we find out what's happening with power and interest rates. All right, let's call it a day there. Enjoy your day, and I'll speak to you again tomorrow at 9:40. Remember, if you like what you hear, it'd be great if you can leave us a like on YouTube. If you haven't subscribed, please do. Some bits and pieces come out there constantly. So, yeah, any questions you may have, feel free to send us an email to support@tradesetup.com.au. Speak to you again soon. Bye.